And now I'm at the share for Balaji Amines, and today it was flat. If I look at 1 year return, then return are negative 27%. If I look at 5 year return looks amazing, 234%. And if I look at maximum return has been 7,500%. And the chart pattern also, you can see it's a chart pattern going from bottom left to top right. Right now there is a dip which we are going to discuss. And if I look at the total fall is around 50%, 54% to be exact, you can see. So share is available at a 54% discount from its top. What this also means is that if it goes up and if it touches its previous high, then you will get a 100% return. And here you can see that this is not the first time that the share has fallen. Earlier also the share fell by 62% during the year 2018 to 2019. So this has happened earlier as well, but after that you can see the upside which the share has shown. Now let's look at the company's business and more details in terms of the capex that this company is doing. So the company, as most of you must be aware of, it is in the business of manufacturing amines, and it is India's one of the largest manufacturers of aliphatic amines. And here you can see that the company is amongst the two major manufacturers of aliphatic amines and its derivative in India with a market share of 50%. So 50% market share this company owns, and the remaining 50%, if you know, mention it in the comment section. And one more important point you can see here, that in 60% of their products, they are the only manufacturer in India, which is a very good moat. And the reason that you have seen a good upside in aliphatic amine company is because of China. So we have to thank China for that, because you can see here that China earlier was the major supplier of amines to India, and in 2018 almost 30% of China's amine capacities were shut down due to pollution issues. So because of this step taken by the Chinese government, Indian aliphatic amine companies have benefited a lot. And here you can see company's key clients. Its key clients includes Dr. Reddy, Sun Pharmaceutical, Aurobindo Pharma, Jubilant Life Sciences, Chorus, Vanki, Zydus, Hindustan Petroleum, and many more. Now let's come to the most important part, which is the expansion, because if a company is doing expansion, then there is high possibility that the company is going to perform well in future. And you can see that in phase 1, their plant commenced operation in May 2021, and there was another plant which commenced operation in September 2022. And in phase 2 of expansion, they are working on a project which is around 300 to 350 crores, and this will be done over the period of FY23 and 24. And you can see here that in total the company is going to add 1,15,000 metric ton per annum capacity till 2025. So company is undergoing massive expansion plans, which is of great news for an investor. So the dip that you're seeing right now, I think it is the greatest opportunity that you're getting in this company, because once this company is done with all these expansion, you may again see this company becoming a rocket. And this is a note that was issued by the company on 5th of February. And here you can see that company has received environmental clearance to the proposed expansion project at Solapur. So it's not only that they have mentioned it on their website, they are actually working towards expansion. You can see in this latest information. And since the company has already gone down by 50%, the market cap has also fallen, and it has now come to around 7,000 crores only. And now I'm at the yearly numbers of the company, and if you look at the yearly numbers still looks very good. In March the sales were 935, which increased to 1308, then 2319, and for the last 12 trailing month it is still up than the previous year, which is 2663. And the profit is also still growing, 181, 373, 630, and now it is still above the last year profit, which was 630. So it's not that company's business is completely gone dabba. Company business is still growing, but obviously not at the speed that it was growing earlier. But I think this is just a pause this company is taking. Once all those capex are done, then we can see a good upside in this company again. And you can see the profit compounding here. It looks very healthy, and the sales compounding also looks very decent. Similarly, the return on equity also is very healthy, about 20%, and the stock CAGR is still very good. 10-year CAGR is still 47%, even after falling by 50%, and 5-year 27, 3-year 72. In the last year, we know there is a dip which is showing as minus 31% right now. And now I'm at the shareholding pattern for this company, and the promoter still holds around 53.7% stake, and FIs have increased their stake from last year to this year, you can see here, and DIs have also increased their stake from last year to this year, and the remaining is with public. So if you are a long-term investor and looking at a horizon of 5 to 10 years, then this company can be the right choice at this moment, because this has already fallen by 50%. The downside now is very limited. The only direction that this company can now go is up. There can still be a possibility that it may fall further. So let's discuss those level, what those level can be. Now I'm at the chart for Balaji Amines, and you can see that from its top it has fallen and it is continuously falling like a falling knife. So right now we should not try to catch this falling knife. We should wait for this knife to fall on the ground and then we can pick it up. And if I look at its support, then the support level which I see after 2178 is 2000 rupees. And here you can see that company took resistance earlier as well. So whenever a company breaks the resistance and it falls back, the resistance then becomes the support. So let's wait. Probably this company may fall to 2000 level also, and at that point of time we will see if the company start consolidating, then we can think of entering into this company. But for now, let's wait and watch and give this company some time to settle down. But one more thing is, even if you get it at 2000 level, then do not do lump sum buying. Keep some portion of your capital still with you, just in case if it falls further, so that you have cash in hand to accumulate more. Now coming on to the logic that why resistance becomes support. So the logic behind that is that the company will only be able to break the resistance when there are huge order placed at the resistance. And when there are huge orders, then only the company will show the upside, which you can see here. And when there is selling again, then the company will come down again at the same resistance level. Why? Because at this point there was a huge buying done. So unless that person, or unless at this level there is again a huge selling, you will not see this company falling down from the support level. It may settle down here, and from here again if there is huge buying, then it can go further up. So these support and resistance level can assist us in finding the right possible price for the company. But whenever there is a crisis situation, when the sentiments are negative, then any resistance or any support does not work. We have seen that during the COVID time. We saw that the market itself was going into circuits. These level works when there is a neutral kind of environment. And as I said, these things, support and resistance, these are only tools to assist you in buying at the best price. If you are new and want to start your investing journey, then the link is mentioned in the description box. You can use that link to open your free demat account and you can start investing. And also, if you have any suggestion or if you want me to make a video on any specific topic, you can mention it in the comment section. And if you are new to this channel, do hit the subscribe button so that you can get regular update whenever there is a video uploaded. So bye for now. We'll meet in the next video with some new information. Thank you.